Good afternoon, everyone. We're going to get started in a few minutes. We're going to give everybody some time to join on. I just realized I was still muted. I am so sorry. So let me go ahead on it and start over. Good afternoon, everyone, and welcome to the webinar on this beautiful Sunday evening. And it's about 3 myths about the OIC offering compromise. I'm going to try my best not to hold you too long. So let's go ahead on and get into it. Now, this is going to be a disclaimer. The information presented in this webinar, the 3 myths about the offering compromise, is intended solely for educational and informational purposes for tax professionals. Now, if you're a taxpayer and you're on this webinar and you want to do your own OIC, then cool. Feel free to join. Now, this does not constitute legal, tax, or accounting advice, and no client practitioner relationship is formed by attending or viewing this presentation. IRS procedures and tax laws are subject to change, and the application can vary depending on the facts and circumstances of each case. Remember, no two cases are alike. Attendees should exercise professional judgment and conduct independent due diligence before applying any strategies or techniques discussed. All examples and case studies are for illustrative and training purposes only and do not guarantee specific results for any client. This is a copyright notice. All materials and content shared within this webinar are the intellectual property of the presenter. No part of this webinar, including slides, handouts, audio, video recordings, may be copied, reproduced, distributed, or shared without prior written consent. Okay, give me 1 second. Let me let a few more people in. First, I want to talk about the statistics. I think this is a very important part of this webinar for the simple fact that some people think that they could just settle their tax debt for pennies on a dollar. Other people may think that, oh, I'm gonna make me some money because I'm gonna do this offering compromise. I know this person. Oh, so let's talk about the statistics. Hi, Eric. For everyone who are just joining in on us, we are really just getting started. I just went over disclaimer. So we're going to really get into the offer and compromise, the myths about it. The IRS offer and compromise acceptance rate has historically averaged around 36.7%, and that is between 2015 and 2024. This rate fluctuates annually and is based upon factors like economic conditions and application quality. So application quality is a big factor, which is one of the reasons why I decided to do this, because the application plays an integral part on trying to get an OIC approved. In 2023, the acceptance rate climbed to about 42.1%. So there was 30,000 offers submitted in 2023 and only 12,000 offers was accepted. In 2024, the rate dropped drastically. That 33,000 OICs were submitted, but only $7,199 OICs was submitted. Now, where do I get this information from? I get it from the Taxpayer Advocate Service. I made sure to resource where I get these statistics from. If you have not heard of the Taxpayer Advocate Service, they are an independent IRS office. They help taxpayers resolve tax issues. The Taxpayer Advocate Service, they focus on the taxpayer bill of rights, and they serve as a mediator between the taxpayer and the IRS. So if you're not on their mailing list or an email list, go to Taxpayer Advocate Service, and you're going to hear me refer to them as TAS or TAS, and subscribe to their email list. They send out some really great information. I actually have worked with the TAS a couple of times with some of my clients. Read their blogs. They have some great information that can help you and help your client. Now, I want to touch a little bit about in 2024 why so many OICs was not accepted. I'm gonna try my best to not step on any toes, but I just want to be honest. Um, and I'm gonna be honest on both sides. Now, a lot of companies are pushing the Fresh Start initiative. A lot of companies are telling these taxpayers you can solve your tax debt for pennies on a dollar. Matter of fact, I'm not going to even mention this company name because I don't want to be sued because I do plan on putting this video on my YouTube channel. Well, there's a group on social media about this particular company. And they are pushing the Irish Fresh Start program. They pushing the narrative, the Fresh Start. It was a Fresh Start program. It's no longer a Fresh Start program. The Irish had made a lot of changes. It was years ago when that Fresh Start program was available. So the Irish came up with the offer in compromise. And that's when you settle your tax debt for less than what you owe. Now, a lot of people was promised a lot, and then I see not just these big companies, but I see other tax professionals. They overpromise but underdeliver. Everybody don't qualify for offering compromise. So even though I'm going to be talking about the OIC, everybody don't qualify, and you need to know there are other programs out there that can help your taxpayers. But if you want to submit an OIC, then you need to fully understand how to do an offer and compromise. It's not negotiation. You don't just put information on an application and submit it and hope that it goes through. That's why with these statistics, it's the application quality. The IRS already know everything about your client. And sometimes I wonder, okay, why they ask us for this if they already know? But we just have to go through the motions. Another thing is, and not to, I'm sorry, but I gotta say it, and I don't want to step on anybody's toes, but let's just be honest. In the tax industry, it has came to make six figures, make six figures. It's been a money grab. This is how you can make money. And that's another reason why some of these OICs was declined because they charging these taxpayers astronomical money, but the offers is not being compromised. I mean, the offer is not being accepted because you are doing a half interview with the client and you're not even filling out the financial statements correctly. So I'm not going to promise my clients any dream. At the end of the day, it's up to the IRS to accept an OIC. I have had an OIC decline, rejected before. And when I tried to see if I could appeal it, first let me go back through an interview with my client and let me see what's going on. So as we move later on to the lessons, you're going to learn about assets. You're going to learn about income, collecting, knowing how much money they make, getting that proof, learning how much expenses they have. And one thing about filling out the collection information statements, you have to ask about all assets. And even though I did, he forgot to tell me about the other vehicle that was in his name. Even though he says he don't pay the car note, it's for his child. But guess what? The IRS already knew that. So the OIC was declined because they considered, oh, you have some equity in this vehicle. Oh, you have three vehicles. You didn't tell us that. You reported you have two. So it could be something as simple as that. that could get an OIC rejected. And I want y'all to know, even though we're not going to go into details about that, that you can appeal an offer and compromise rejection. So let's define an offer and compromise. An offer is a compromise that allows taxpayers to settle their tax debt for less than the full amount that they owe, but they have to qualify. It may be a legitimate option if the taxpayer can't pay their full tax liability, or if they do, it's going to create a financial hardship. So these are the three things that the IRS considered. It's the unique set of facts and the circumstances. It's the ability to pay. Can they even pay the IRS in full? Can they pay the IRS at all? It's the income. That's the total amount that they make in expenses. Are they upside down? Are they living above their means? Do they have any disposable income left? So the IRS considered these three things for an OIC. Doubt as to liability. So doubt as to liability means that they owe. Well, no, I'm saying that's the wrong definition. Doubt as to liability means that they don't think they owe, or the IRS may have assessed the balance in error. So that's doubt as to liability. Doubt as to collectability means that the IRS may not be able to collect on this debt in full, or they may have to just sub a partial amount. Now, effective tax administration could mean that, let's just say, a taxpayer can pay their tax debt in full, but doing so is going to cause them an undue economic hardship. Now, an example of that one is someone that's on Social Security or someone that's on a fixed income. Now, let's talk about the acceptance of an OIC. One of the things that's very, very important if you submit an offer and compromise is compliance, compliance, compliance. So, as part of the OIC that's submitted, the taxpayer agrees to remain fully compliant with all filing and all payment requirements for 5 years after acceptance of the OIC. Now, if a taxpayer fails to stay in compliance, the entire liability minus the amount that paid, because they're gonna give them credit for that, plus interest and penalties may be reinstated. So this could be another way on how you can make money. So you have to be able to charge accordingly, because while you are trying to complete the OIC application, it's going to be some tax planning involved, especially with business owners. And the reason why I say that is because I'm gonna just give a couple of examples. I'm not going to even go into detail. You may instruct your taxpayer to go get a life insurance policy. Now that's going to count with the IRS national standards. You may instruct them to go sign up for some health insurance, because the IRS is going to give them a credit for that. Another way on how you can make additional stream of income. Now, just because the taxpayer's OIC has been accepted by the IRS, don't just send a closeout letter and just say, okay, thank you for your business. Congratulations, we're done. This could be another stream of revenue for you where you can offer IRS monitoring. For me, for my individuals, I charge $47 a month. For my business owners, I charge $97 a month. So when you think of IRS monitoring, you're going to monitor their account monthly and you give them a report monthly. This is where you can see if they're making their payments on time. Now, if you want to hire an assistant to do that part and train an assistant on what to look for, cool, because that takes too much time out of my day. I just pay somebody to do that part for me. Excuse me. So you're looking to see if are they filing their taxes on time. You're looking to see if they making their payments on time, and you also looking to see if they're going to receive an IRS letter. Sometimes the notice is going to be posted on the transcript, and it's going to have a date that it's going to be there, and they may receive that letter within 10 days. If you have an 8821 and a 2848 on file, then whenever the taxpayer get a letter, then you're going to get that letter as well. So that could be a couple of different ways on how you can earn additional revenue. And also, let me go back to that. So I like to use calculations because I have to be able to calculate how much money I need to make and how much money I actually have made. So if you offer IRS monitoring to your clients, let's just say you have 10 individual taxpayers, and people who are good candidate for OIC or these low income taxpayers, they got all these dividends and fuel credits and they owe $20,000 and $30,000. they can't pay. They low income. They just can't pay. So they are great candidates for OIC, but you gotta make sure you can qualify them for it. It's pretty much known as a pre-qualifier. So if you offering IRS monitoring to about 10 individuals, that's $10 times $47. That's $407, $470. If you offer IRS monitoring to, let's just say, 5 people, so that's $97 times 5 people. That's $485 plus 470. That's a total of $955 additional each month you have made just by offering IRS monitoring. Thank you all for everyone who are just joining in. We just now get into the meat and potatoes of the 3 myths about OIC. So how I look at it, once an IRS accept the OIC, give that taxpayer an opportunity to follow up with them every single month. 9 times out of 10, you want to keep that taxpayer with you. You want them to come back to you, and once you've done a great job, they're gonna send more people to you. So as far as the additional stream of revenue, I mean, car notes so high that helps pay my car note. Maybe you want to book that vacation. Maybe you could get some marketing materials for your business. You know you have this money coming every single month. So month one, you order some branded pens. Month two, you order your branded folders. Month three, you put an ad on the radio or TV. So it's still an additional stream of revenue that could be very lucrative for your business. So let's get into the myths. The myth number one, the key to selling tax debt is negotiation with the IRS. The IRS, you can't go back and forth with the IRS. You can't just put a number out there and hope that the IRS accept it. No, that it does not work like that. You have to get the facts. And how do you get the facts? One, you have to do a client interview. Then you have to do an IRS investigation. After that IRS investigation, you have to go back to that taxpayer with a plan of action. And the next step would to be get that taxpayer in compliance. After you get them in compliance, now you need to do a financial analysis. Now you need to do a collection information statement, see how much money they make, and you have to get proof of these documents. So this is the offer is based upon the reasonable collection potential, which is the RCP. And I'm going to go into detail about the RCP in just a little while. So documentation beats conversation any day. So don't try to negotiate with the IRS. Get the facts. Myth number two, you cannot stop filing tax returns or making current payments while your OIC is pending or after it's accepted. This is why a lot of OICs are pulled back. It's because they stop making payments and they don't file taxes. And even business owners, I don't understand why they just don't want to pay quarterly taxes. I don't understand why they don't do their payroll taxes. This is how in our OIC is going to get declined or it's going to get canceled because they not staying in compliance. Myth number three, settlement is too good to be true. So back to when I was telling you about this group that's on Facebook that is really bashing this company. This company have radio ads, they have TV ads. I mean, I'm in my car. I'm listening to Pandora sometimes. Sometimes I'm listening to Cyrus, and I just hear the Fresh Start Initiative. With this company overpromise and underdeliver. So now taxpayers feel that you cannot help them settle their tax debt. And you cannot promise. At the end of the day, it's up to the IRS to accept that OIC. And it's based upon a reasonable collection potential and the facts, their assets, how much equity they have, if they have any disposable income. And it happened to me. It happened to me. So I know why. So doing a thorough interview is going to really help you. Well, the truth is, They have these programs out here that can help the taxpayer. So you have to know that everybody's not going to qualify for an offer and compromise. And this is where you explain. You got to go into detail with these taxpayers. You can't tell them a piece of information and hoping and praying that they just go ahead on and sign up with you. So you let them know. And this is what I tell my taxpayers. I have to conduct an iris investigation. They could come in with letters. They could say they have this, they're ready to get this done, and I understand what you're saying. I really do. But I have to conduct my own investigation. And one time a lady asked me, well, what do you need? I said, I need to be able to pull a transcript. She just threw the transcripts at me. The lady was 76 years old. I had to be really patient until I just had to tell her, look, lady, don't yell at me. Yeah, I know you're old enough to be my great grandma. Don't yell at me. At the end of the day, respect goes both ways. But needless to say, as I'm going through my interview with this client, I always offer free consultations. I tell them about the different programs. You have the offer and compromise, and I explain what that is. Then you have the partial pay installment agreement. And as y'all can see, I put on here, don't sleep on PPIAs. Again, everybody is not going to qualify, especially when I go through bank statements and you have some of these plant workers, you have some of these business owners. Some of them really do have a whole lot of disposable income, so they may not be able to qualify. But other programs, the PPIA, for example, let's just say you have a taxpayer who have an old tax debt, maybe $20,000 or $30,000. So you put them on a PPIA, and let's just say they had 2 years left for that debt to expire. After that, it's just gone. After those 2 years, it's gone. So the IRS is not collecting this tax debt in full, but they're able to collect some. Then you have currently not collectible. Now, you have two types of currently not collectible. You have one due to hardship and one not due to hardship. You have some taxpayer, like once you're done with the financial analysis, um, that's when you'll be able to determine if the taxpayer can pay at all. You have some people who have medical issues. Some people lost a spouse, they had a baby, they lost their job, so they unable to pay the IRS anything. They don't qualify. Just because a taxpayer has $0 to give to the IRS, it does not mean they're going to qualify for the offer and compromise. That's when you want to put the taxpayer in CNC, currently not collectible, due to hardship. And then there's penalty abatements. I'm not going to go into detail about that. So, myth number 4. I know I say 3, but I'm just going to give y'all one more. The IRS will settle for pennies on the dollars or a fixed percentage of the debt. So, the amount the IRS is set is not a random percentage or subject to haggling instead. It is calculated based upon the reasonable collection potential, which is the RCP. So, when you hear the IRS going to settle for pennies on a dollar, it's to a certain extent. That's how I like to use that. But again, everybody do not qualify for that. That's why you have to understand what is the reasonable collection potential. So let's understand what is the RCP. A reasonable collection potential is the IRS method of determining how much a taxpayer can realistically pay toward a tax debt through an offering compromise. It does represent the total value of the taxpayer's ability to pay, and this is based upon assets and future income combined. Some people have assets and some people don't have assets. People who don't have assets, I work with them better. So let me tell y'all about this story. And I guess this is probably why this is how I'm able to get so knowledgeable, because I'm always training. I actually had to pay one-on-one to understand the RCP. Now the RCP, it does have a lot to do with the net equity that the taxpayer may have. And so I had a hard time trying to calculate that at one point. But now I get it. Now I understand. Because the IRS may want your house. They may want the equity in your house. They may want you to sell your vehicle. They may want you to pull out your retirement account. So all of these, even with life insurance, with whole life, with cash value, the IRS looks at all of that. So what is the purpose of the RCP? The IRS uses the RCP to decide if an OIC should be accepted. If the offer amount is greater than the RCP, the IRS may accept the offer. But if the offer amount is less than the RCP, the IRS will likely reject it because they believe the taxpayer can pay more. So, remember, I do use a lot of abbreviations, but these abbreviations are from the IRS. RCP, reasonable collection potential, OIC, offering compromise, collection information statement, CIS, partial pay installment agreement, PPIA. So let's look at the formula. The RCP is the net realizable equity in assets plus the future income. Here's an example. If a taxpayer has $5,000 in net equity after allowable adjustment and $200 monthly disposable income, so you probably have a question. What is the net equity? It could be cash on hand. It could be cash that's in the bank account. It could be retirement account value. It could be coins. It could be collectible. It could be vehicles. It could be the home. It could be jewelry, things of that nature. So if you have the R to determine the RCP, you have $5,000 in net equity. The monthly disposable income, that's the money that's left over after you figure all expenses and all income. So that's $200 times 12 months. That's $7,400. So this is what you can possibly submit to the IRS as a lump sum offer. So the minimum set to offer is going to be $7,400. Now, if the taxpayer can't full pay that, they can do a down payment and pay either over 12 months or 24 months. And they have to pay an application fee, and that application fee is $205. So at this time, I'm going to take any questions at this time. Anybody have any questions about anything that I have went over, or do you need more details when it comes to the RCP? Okay, Eric said, what does the free consultation end and the research begin? So the free consultation starts at me, I'm advertising. Do you have any tax problems? Do you have an IRS letter or you face it in IRS audit? Have your bank account been frozen? Different type of tax problems I'm advertising. Even sometimes I know here in Louisiana, if you don't file your state taxes, then they will suspend your license. They'll suspend your driver's license. If you're a nurse, they'll suspend that. If you have hunting license, fishing license, they will suspend that as well. So when I advertise for that, a taxpayer may inbox me, text me, or go book an appointment on their own. My consultation is about 30 minutes. I try my best not to go over an hour for a consultation. At that point, I'm just listening to what's going on. They'll bring in their IRS letters. If they out of state, either we meeting on Zoom or we meeting on via phone call. And they telling me they got this IRS letter. I look over the IRS letter. Now, when I'm having my consultation, in order for me to effectively assess, and give you more tips about what's going on, you have to send the IRS letter. Sometimes they don't always have an IRS letters. I'm asking questions. How did you get in this situation? Did you have any life changes that happened? Did anybody have a baby? Did anybody die? Did anybody lose their job? So I am going through a thorough interview and I'm listening to everything that's going on. And I'm also asking them, what type of outcome do you want to see? Because I want everybody to be in reality. Once I'm done listening to them and I'm giving them my feedback, I say, hey, this is what I need to do. I need to conduct an IRS investigation. Thank you for sharing with me everything that has happened, what went on, but let me do this IRS investigation. It's going to take me about 10 or 14 days. What I'm going to do is I'm going to pull your transcript for the last 10 years. I'm going to see if you in compliance or not in compliance. I'm going to see if you qualify for any type of penalties. In some cases, like if they receive a notice of federal tax lien, then I may have to actually go deeper. My investigations are a little bit more deeper than that, and it's also dependent upon what I'm working with that particular taxpayer. And after the free consultation, I say, hey, this is how much I charge. I start at $575 for consultations for individual businesses. It goes up. If they have a notice of federal tax lien, that's $1,500 that I'm charging. Once I determine what I need to do, that depends on that particular taxpayer how much I am going to charge. You can no, you can't not charge contingent fees for OICs, but you can charge contingent fees for penalty abatements. Now, as far as let me see, what's the best way I can put this? I don't want to go too detailed into pricing for offering compromise on this webinar, but no, you don't charge contingent fees for OICs. You're welcome. Do anybody else have any questions? Okay. If you all don't have any other questions, I am launching an offering compromise class. And in this class, this is what you're going to learn. You're going to learn how to effectively and efficiently complete an OIC. We're going to break down understanding OIC. And I think if you truly understand what all comes with the OIC and where to plug and play your numbers and how to plug and play your numbers, then you will have a better success rate in getting approval. We're going to definitely explore the types of OIC, and I'm going to give some examples. We're going to complete a financial analysis. We're going to complete the 433A and the 656 booklet. We're going to understand, we're going to do more examples of the RCP. And I'm going to also go over, even though I did in this webinar not too long ago about other IRS solutions, but I'm going to talk about it more to detail. We're going to have a live Q&A and bonus upgrades. Not bonus upgrades. I have a VIP session as well. Melody said, "Can you do an OLC? Oh, I guess OIC for a client that was audited in 2020 and owes a balance? Possibility if they qualify for it, but you have to do a thorough interview. You're gonna have to do a financial analysis. When I do my financial analysis is about 2 hours with the client. Um, A lawyer told me a way on how I could stream. Oh, Cassie said she paid for the class. Oh wait, hold on. I have a early bird code. So I'm gonna see what class you paid for, and I'm gonna give you the difference for the early bird code. I got you, Cassie. So a lawyer, let me tell you what a lawyer told me about the financial analysis because he asked me how I did it. And I am very, very hands-on when it comes to handling the tax products for my clients. I'd rather do it. I want to be hands-on because I don't want to mess this up. And I'm collecting a lot of money from these taxpayers. And look, I pay my bills, I pay my office bills, I pay my house bills. I'm not trying to be in a position where I have to refund these clients because somebody messed up. I do it myself. So with the financial analysis, if they are here in Louisiana or within my close proximity, I give them an opportunity to say, hey, come in office, let's sit down for a couple of hours. And these are the things that you're going to need. At least 3 months of your bank statements, your check stubs, retirement accounts. If you have any assets, Bitcoins, car notes, all of that stuff, I need the last 3 months of it. Um, if they are out of state, we meet it on Zoom. It's no exceptions. I'm not gonna do a financial analysis over the phone at all. Is it a Zoom or it's in person? So they have to block off that time. So once I do that financial analysis and I look at all the income, all the expenses, everything they have, then I start filling out the 433A. And what else I do after that? Yeah, I just fill it out. I actually do it at least 2 or 3 times. I don't mind. I'm pen and paper. So I fill it out about 2 or 3 times to make sure everything match up. And for there, that's how I could determine if they qualify for OIC. So to tell you that yes, she can qualify for the OIC because she owes a balance, I can't just say yes. You have to do a financial analysis and you have to fill out that collection information statement. You got to charge accordingly for your time as well. So the average case, let's just say you have a client, okay, if they owe $30,000, so you want to charge 10% of that $30,000. So that's going to be about $3,000. And that could be give or take. Because sometimes these taxpayers, they take a long time to send you documents. I had one now that came referred, and the lady told the other preparer, well, what's going on? Look, I shared my screen. I need these documents. I mean, and I had to tell her one day, I say, look, she was wealthy, her and her husband, very wealthy. They had retirements, they had investments, they had stocks, they had all kind of stuff. And she didn't want me to see nothing. And I told her, I said, look, the IRS already know I don't want to be in your business, but I have to be in your business. And now I find myself telling that to every single client. If you can't be honest with me, then I can't help you. Straight up, just like that. And it's not going to be any refund on the work I have already done. 10% at the minimum. Yep, because you don't know what you might have to do. So first you're charging your investigation fee. And I know many people charge $1,500 for an investigation fee. I just start at $575. Then you have to consider, what if you need to file any bad taxes for these clients? What if you have a business client that hadn't filed their payroll taxes? Then you have to go file them 941s. And what if they have to file W-2s, issue W-2s or 1099s to their employees or contractors? And that's why the investigation fee is very, very important. And that's why you have to really understand how to read a transcript, because the account transcript is pretty much the life. In some instances, you may actually have to request a FOIL. A FOIL is a Freedom of Information Act, and it has everything, how the tax return was filed, the notes that the IRS put on the taxpayer. Sometimes you may have to ask for that in order for you to come up with the best possible outcome or see what's really going on with this taxpayer. Yes, grab the record of account. Okay, somebody said mine is 225 invest. Oh, yes, you definitely need to go up. Please go up. Your time is very valuable. When I first got into this, I was charging 375, and my mentor said, oh no, ma'am, you need to go up. So I went up to 575, just a starting point. I had one lady, I told, well, two people lately, I told them $1,500 just to do the investigation. One lady, she owed $38,000. She filed her corporate tax wrong. So I was able to get a 60-day extension for her. Because I'm still trying to figure out what she did wrong. And then the other lady, it's and I hated to charge her $1,500 just to do the investigation, because she even showed me text messages between her and the last preparer. The last preparer was really just gaslighting. If you don't know how to do this, then either you need to sign up for a class, get a mentor, or just refer that client out. And maybe some people really don't want to do this. You have a lot of enrolled agents that don't even do this. You have tax professionals that don't want to do this. You could partner with bookkeepers as well, and that way you can still make money. Because these people livelihood. Monica said, will you earn more revenue working with tax resolution clients versus tax planning and advisory clients? Okay, so I'm just gonna give you my input. Some people do well with tax planning and advisory clients. I do tie in, but I don't heavily push tax planning that much anymore. And the reason why is because I guess where I'm at, I don't know if it's, maybe it's just not my calling. I'm gonna put it like that. But a lot of my clients are hard headed, especially business owners. They want to save money on their taxes, but and they want the strategies and they're willing to pay you, but they hard-headed, they don't listen at all. So I don't know if it's my approach. And a guy had asked me that, is it your approach? And I say, well, it might be. So he's willing to work with me, but I love tax resolution. And once I found something that I really, really love, then I learned how to capitalize off it. So even it could still go hand in hand, and maybe it just wasn't my calling, or maybe it just didn't challenge me. But I'm not gonna knock it because you can make some good money with that. Let's see. Hold on, I'm trying to go to the next message. It's like a diet. Yes. I have one I'm finalizing this week. He owes 45K. Can I pay you to look over before I send it in? Oh, yes, ma'am. Just make sure you have the last 3 months of everything. Now, once I start looking over what you've done, and see what all expenses and income that he has, then I'll look at those documents for you and we can match it up. Let me see. Let me get my ink pen. Where's my ink pen so I can write y'all names down? Cassie, did you register under your name, Cassie Moore?
Yes, I registered under Cassie Moore.
Okay. Y'all give me 1 second. Damn it. Let's see. Go to the next question. Everybody wants to lose weight, but no one wants to do the work. Yes, something like me. I was just thinking today, I said, oh my God, I had bought a jacket. It's a two-piece outfit that I bought for an event. The jacket is tight around my arms. I have big arms. I'm kind of muscular, athletic. So I say, Lord, I need to lose 10 weeks, 10 pounds this week so I could get into that jacket. Oh, you're welcome, Monica. You're welcome, Twyla. Okay, y'all. So, let's go over the difference between the standard and the VIP. Think y'all gonna like this one. So the difference between the standard and the VIP, with the standard class, is gonna be a live 2 day class. So the VIP is gonna have a live 2 day class on OIC. You're gonna have the replay available for 14 days. I'm gonna give you some price and marketing tips, and you're gonna get a certificate of completion. Now, if you decide to do the VIP upgrade, that's everything that's in the standard. The replay for the VIP upgrade is going to be for 30 days. You're going to get bonus training materials. I'm going to give you my OIC checklist. I'm going to give you my engagement letters. You're going to get a private mastermind session. So the private mastermind session is going to be on a different date. You're going to get a sample financial analysis worksheet. So one of the analysis that I have is going to already be completed, and you can use it as a guide. And you're going to get the implementation support. Now, the implementation support, that means you're going to have 60 days. So you're going to have to actively market for these type of clients. And even though we are in November, it's a lot of things that you can still do. We know the IRS e-file is going to close sometimes beginning of December, but I go to the IRS building and I drop paperwork off. And you can still mail in tax returns, but you will have to make sure you get tracking with make sure they sign for it as well. So with the implementation support, you have 60 days to get your client, and we sit down one-on-one with that client. So if this is something that you truly want to learn and really have an understanding, and you have someone that's willing to work with you one-on-one, then you can sign up. You can save $25 on the class. Now, if you already took a a training class from me, such as what was the latest class? If you already took a tax resolution class, don't sign up for this. If you already took my tax resolution class, and if you are currently in my tax resolution class, don't sign up for this. I'm gonna make sure you get in it. Now, this code is going to expire November 4th. Monica said, "Oh my God, I paid over $1,000 for Eric Green. Oh, and the tax resolution, and this is an amazing price." I know it's really a steal. It's really a steal. And the reason why now my tax resolution class is $997. That class is that. But just for an OIC, it's no need for me to charge $1,000 for OIC. And my business is very blessed, very blessed. So, sometimes you got to catch a fly with honey. Yes, ma'am, the miracle. Lamerica's been killing it. She took my tax resolution class, and she has been killing it in the tax resolution industry. And y'all, it really do starts with, marketing, because you can take all the classes that you want to take, but at the end of the day, what really going to matter is actually getting those clients hands on, because your client is going to be your best experience in teacher. And also, if you want to sign up for the class, my website, I'm gonna drop it in a link. Taxmasterpros.com. And it's under offer and compromise. Matter of fact, let me go directly to the website. Do anybody have any other questions? Give me some feedback. I love feedback. Is there any way I can improve this? Or if it's something that you want me to do another training on? Hey y'all, so we made it just under an hour, so that's good, because sometimes I could be very long-winded. Okay, somebody said this is definitely good bait to sign up for your class. It's information, yet still OIC is an art and how to do correctly. Oh yes. One thing about me, um, it's something like try before you buy. Cause I have spent so much money, y'all. The last money I spent, $2,500. I call it stupid money. And like I could really kick myself in the tail because I didn't get what I paid for. And it's been so many classes. So for now on, you need to be able to show me some proof of something. You need to do an informational, and you don't need to just read completely from slides. You need to be able to know what you're talking about. I done spent stupid money. Yes, you are good with the yes. I had a tax resolution. No, it was intro to tax resolution series. So that was a 4 week series and that was free. I mean, you gotta give a little sometimes. Do your clients ask for your credentials? Such nope, never. I never had not one single person ask me for credentials. Now, as far as business owners, sometimes they ask me, "Are you a CPA?" Because they need business taxes filed. But as far as kind of solve tax problems, nope. Let me tell you what helps me out. I have a commercial that's running on TV about tax problems. Maybe a couple of years ago, I had an ad on the radio. So they heard the ad on the radio and contacted me. I get a lot of people off of social media because I give a lot of tips. Now I don't go into details. Um, I just give bits and pieces, so that's how I get clients. Or they just come referred, or they may go to Google and they'll Google certain keywords. And people research me. They just look me up. They love what I have to say, and then from there they just do business with me. And every business owner that's on here, you all need to have your business listed with Google and you all need to collect Google reviews. I wish all my clients would collect Google reviews. And matter of fact, I gotta go pick on one lady right now because after what I did for her, you still ain't leave me a Google review. But always ask your clients for Google reviews. And let me tell you something about the credentials. The only people who are hard up about credentials are enrolled agents. CPAs, tax attorneys, they would love to work with tax professionals, but I am studying for my EA. I failed part one by 5 points. So I will still encourage you to get your EA, but don't get caught up in that hype. I actually met someone at a vendor event not too long ago, and she offers tax resolution. So, I went walked up to her, had a conversation with her, and I said, do you have your EI license? She said, no. I said, how long have you been doing this? She said she been doing it for like the last 7 years. I said, you don't get any feedback? She said she don't listen to people. Just like that. Lamerica said that intro sold her. Oh yes. So I am about what I'm talking about. I don't post my money to social media, but every now and then I may share in a class, like, this is how much that you can make because this is what I'm making. And some of my clients are on payment plans. I love a payment plan. Don't pay me upfront because I might go see a person. Pay me a monthly installment. So I'm perfectly fine with that. Let's see. Monica said, I'm a AFSP QB advisor, 15 years plus in taxes. I've been blessed, but always hide about my credentials. I'm horrible at taking tests, so EA stresses me out. So have you started studying for the EA? Yeah. The EA is something, I just keep constantly taking the quizzes so I can just try to stay fresh and whatever I get wrong, I just make sure I go back and read it and they give the summary on why is that answer. I think that will help me better. But you know, EA is respected but not needed for real for and you're right. Like it's I'm doing well. I'm doing very, very well. And it's just our people that just get strung out on credentials. So don't listen to the hype. Stay in your lane and just keep it like that. You want to make money. You want financial freedom. You want to be able to help your clients. You have this knowledge up here that you just sitting on. And I'm a firm believer in if you don't use it, you lose it. You're very welcome, Monica. Let me see. What was this other one? I have to give. Oh, she failed. You failed it too by 5 points. Man, do you know how heartbreaking that is? Let me tell y'all what I did when I um when I failed that test by 5 points. I had went to New Orleans and I went on Bourbon Street all by myself. I was just so disappointed. I was disgusted. I said, forget it. I don't want to think about nothing else. Cassie said multiple six figures, AFSP. I know, right? Yep. I had this story, and I'm not gonna hold y'all too much longer. So, I drive school buses. I've been doing that in December. I think it's December 8th. It's about to be 17 years that I have been driving school buses. So I had kids early, so I always worked two, three jobs. Always did that. And then I started dating a guy. My mistake was bringing him to our hometown and people seen us. People, I didn't even know who he was. I didn't even know he was from there. Well, needless to say, a lot of females started hating on me and bad, bad. They was telling me, "Oh, what you want with her? She just a school bus driver. She don't have a degree. If she lose her job today or tomorrow, she ain't got nothing to fall back on." I mean, they was hating real, real bad. And let me just say, go and make them your enemies your footstool. You got to be careful because I've seen people with bachelor's degrees. They're not making what I make at all. They are real life struggling. So you just never know. Everybody is not as fortunate. Let's see. Kamika said, I'm studying for part one now, but I still work a full-time job plus trying to gear up for the tax season. I am stressed because I can't even get past the practice exam, LOL. I keep having to stop and start studying so hard. It is very hard because let me tell you, you even though I've been doing taxes for a long time, and you look at part one, you think you got it. You think you know all about the pendants. You think you know all about filing status. And then when you take the practice test, you're like, wait a minute, what? Or when you listen to a video, you're like, what? So just try to set aside an hour each night and on weekends, I don't do it. Now I did it yesterday. I was just in the house. I ain't go nowhere yesterday. I ain't been out the house in 2 days, y'all. But I took last night I took a couple of practice exams. I try to do that before I go to sleep, but just an hour each day, even if it's 30 minutes. If I'm sitting at the train track or on the ferry, I pull it out and I start reading. I read a lot, lot, lot. What else? If I'm soaking in the tub, I read. And they got a new book coming out. So I also like to read books, regular books. So if that book come out, I know I'm gonna put it to the side. But don't stress yourself out. What's for you is gonna be for you. You kind of have to like get your schedule organized on the things that you're gonna do day to day. Have a to-do list of what you're gonna do and the times that you're gonna do those things. And sometimes I hate being bound to a calendar, but I have to. Miss Dorothy say, "Hey, Miss Kenyatta, looking forward to taking an OIC class." Yes, ma'am. Thank you so much for joining. I'm not gonna give up. I gotta get it. I gotta get it. At least past part one. After part one, then I'm gonna go to part three, and then I'm gonna focus on part two because with everything changing, I just don't want a new cycle to come out and I gotta learn all these things all over again. I don't want to do that. Good. So maybe, one of us could be an accountability partner at a certain time. Normally, for me, since I'm teaching every day, and sometimes people be getting mad. People be trying to push me to get my EA. They was like, you don't need to do this. You don't need to do that. You need to be studying for your EA. I'm like, look, I got to make money. Okay. I still have bills that roll around. As a matter of fact, my mortgage, I paid my mortgage already, but I got to pay the landlord for my building. So I got to make money. And then I took a class and I posted the certificate and I don't even post my certificate no more because they be watching. You don't need to take no more classes. I'm working with these clients. I'm gonna take these classes. Well, it's been such a pleasure teaching you all. And don't forget, the code is early bird. If you already took my tax resolution class, don't sign up. I'm going to email you individually. The Miracle, India, Dorothy, and I didn't see anybody else on here. Okay, so let me share my screen again. That's not what I want to share. Okay, so this class is going to be November 15th and 16th. It's going to be from 1 to 3, probably maybe about 2.5 hours. If I feel that what I'm covering is not enough to fit in this 2 days, then we'll do another date. And the reason why I had to do it on a Saturday and Sunday because I am actually training Monday through Thursdays. So November 15th and 16th. Also, it's two different classes. If you do the VIP, you get access to the mastermind, which will be scheduled at a later date from 1 to 3 CST time, Central Standard Time. I got a lot going on this month. Well, Mr. Arthur, we still need to do a one-on-one, so we'll be good. Now, the replays for the standard class going to be available for 14 days, and the replays for the VIP class going to be available for 30 days. And Miss Dorothy, you still have access to the other class in um the tax resolution class. All right, leave me some reviews. Give me a shout out on social media. If you learned anything, give me a shout out on social media or just leave me a review. I will greatly appreciate it. Let everybody know how great this class was and if you learned something. Thank you all. You all have a beautiful, blessed night. Oh yeah, Mr. Rand, you thank you. Thank you. Good night, everybody. Oh, wait a minute.